Good afternoon, everybody. Welcome to our webcast of technical analysis, getting started with technical analysis. I'm Connie Hill. I'm happy to be here with you here today. Do any of you struggle with knowing, do you have an entry signal? Do you have an exit signal? Sometimes we have to use our discretion with that. Today, we're going to talk about using a technical indicator where you don't need to use discretion. In fact, if you can follow two simple rules, you've got an entry or you've got an exit. All right, this hopefully will be interesting to you, this new approach. Well, it might not be totally new to some of you, but possibly so. I am joined in the chat by Lee Bowl. I'm glad Lee is here. Lee is a technical analysis expert. Wazoo. If you have any questions, go ahead, chat them in. We want you to get your questions answered. Those of you that are listening to this on the recording, and I know lots of you do, when you have a question, put it in the comment section. I go back and address those throughout the day so you can get your question answered quickly as well. Now, I hope you're following me on X. I'm Connie Hill, CS. You want to be making sure you're following Lee as well. He is Lee Bowl, CS, and we'll post educational content, things we've noticed in the market, maybe something interesting that we think you might find interesting as well, or things that we might go ahead and share with you. So get in on those little tidbits of things. All right. Let's go through some disclosures, and I'll lay out our agenda here today. What we talk about today is intended for illustrative and educational purposes only. Don't consider anything a recommendation. Past performance is no guarantee of future results. We will be using the Thinkorswim desktop version of software here today. That's the most robust version. That is really helpful for lots of trading, not just necessarily option trading, but also investing as well. Remember, investing involves risk, including the loss of principal. Now, in this particular series, we will focus on different things. We've spent some time in the past looking at trend identification. We've also spent some time on some technical indicators. We looked at DMI, we looked at RSI, and today we're going to go back to trend identification for this system that I want to teach you that really you have an entry or an exit, and that's it. You don't have to use your discretion so much. Okay, so today we're going to talk about the tenets of trends, what that means, discuss methods for trend identification, and then we're going to look at a lot of examples here today. And what I want to share with you is something that we might do with moving averages. Okay, so I'll just give you a little bit more detail here. Now, I need to check the chat here real quick, see if there is anything that I need to answer. It looks like we're in good shape so far, and Lee is handling things. You guys are joining us from all over the place, which we appreciate. All right. Now, price moves in trends, right? We can have an uptrend, a downtrend, or a sideways trend. If a stock is making higher highs and higher lows, that's what we're going to see as that uptrend, and that's not a very good color to use. All right, let's try this, right? Higher peaks, higher troughs. Yeah, that's our uptrend. When we start seeing the stock maybe make equal peaks and equal highs, then we're kind of in a sideways pattern. Sometimes we'll see it in a range. And then, of course, we have a downtrend, right, where the stock maybe is making lower peaks and lower highs. And that's how we can attribute that. Now, the market discounts everything. What the heck does that mean? Essentially, we're not smarter than the market. I mean, we've got some smart people in here, all right? But the market has everything priced in that it knows, and it's priced in immediately before, maybe a new piece of news comes out. Man, that price adjusts so quickly, almost before we blink our eyes. And so just know that, you might have a particular idea, but if the market is telling you otherwise, pay attention to what the market is telling you. History repeats itself or looks similar. That's where we might look for tendencies for maybe some support levels and resistance levels to be built because the same type of activity is taking place, right? The stock runs up to resistance area and has a hard time getting over it. Well, it's because sellers are selling again. Maybe they did that in the past at that similar area. And the same thing as far as support goes, if a stock's doing good at holding a stock at a particular level, the price at a particular level, then we look at that and say, well, okay, lots of buying activity occurs because the price of the stock tends to bounce at those areas. Now, and the moving average can act as that as well, right? Sometimes a stock might reflect or bounce off of a moving average. Now, one thing to keep in mind as we go to our next page here, that there are time frames we want to consider. All right. Now, in this little graphic here, we have a green line going up here, and it's showing us kind of where the bounces are, where the trend is for an intermediate length trend. The blue line that we see over here, notice the touches aren't quite as many, right? They come down to the major trough points and connect down, and that would be more of an a long-term trade. And we're going to use different moving averages to help us assess, is this a long-term, intermediate term, or short-term trend that we're looking at. And then this little bullet point here, an important rule among technical traders is to trade the trend that matches or meets your idea of what you're doing with the trade right then. In other words, do you think you want it as a short-term opportunity? Or are you investing? You're not planning to get in and out all that much, right? Then we want to make sure we're picking the appropriate moving average to do that. Okay, so let's go look at some examples here. And Lee, I appreciate you posting the idea to click on the link for the playlist. If you've missed any of these sessions that we've had in the past, and I'll also put links in my show notes, I'll put links into those previous classes as well. All right, let's hop over to the Thinkorswim. Now we're going to start out here. We're just going to use the S&P 500, and I have some different moving averages on here. So you'll see we've got a blue line that seems to move pretty quickly. That's just a 10-period simple moving average. All of these are simples, okay? The red line, whoops, I didn't mean to click on it. I just wanted to point to it. The red line's quite a ways below the blue line. So this one is our 50-day moving average. So the 10 would be for a short-term trend. 50 would be for an intermediate trend. And it doesn't have to be exactly 50. People may use a 30, a 40, or a 50 for that intermediate time frame. And you may find a stock that maybe uses one more often than it uses another. All right. The 100-day is a little bit more of a longer term moving average. That's our black line. And then clear down here is our 200-day moving average. So both of those are more indicative of longer term trends. So if somebody were getting into a trade, they might not be all that concerned about where the 200-day moving average is if a stock is responding to shorter term moving averages or an intermediate moving average. That might not even come into question at all if it's well above the 200-day moving average, like what we're seeing on the SPX here today. Now, let's take another look at this. We're going to use a different group of moving averages. So I'm going to change my style here, and I am going to load in the one. I think this is the one I want. I want one that starts with 5. We're going to go 5, 10, 20, and 30. All right. So those are all going to be shorter term moving averages. So the one in red is the 30. The one in green is the 20. The one in blue is the 10, and this purple one is 5. Now, 5 is very reactive, right? And it's interesting as we look at the SPX here, one of these moving averages that we might consider a little bit shorter term, which one of those does it seem to react best to? Now, I would say also this 30-day moving average, it could be in that intermediate time frame as opposed to the short time frame. But what's interesting here is we look at SPX, look how when it's trending in a real strong direction, how it kind of stays knit to and doesn't cross very often that 5, right? It comes up, it follows it as it's heading up. Then when it consolidates, pulls back, that's when it maybe pulls back to one of the other moving averages, okay? Now, today what we're going to talk about is a non-discretionary system where all we have to do is follow a cross. And I'm going to pull up some different moving averages for this one. We are going to pull up and use for the rest of our time here. We're going to use a 5-day moving average and a 20-day moving average. And let me pull up a stock here that we might you might recognize if I type it right. All right, NVIDIA. You know, it's probably been made known to you that it's been a stock that's on the move this year, right? People are following it. It's in the news, lots of buzz and so forth. And we can see here just with the labels that I have up here at the top. Year to date, this stock is up 174%. Okay, that's just year to date. So numbers are just telling us what's going on. Now, in this particular scenario, I want you to look and we'll say, well, when did the 5 cross the 20 the last time? Okay, so the last time that it crossed was clear back here. Looks like either this date or maybe for sure this date. If I look at those numbers, it actually didn't cross through until the day right here where we can see that separation between the two. That would be our crossover day. When you see a stock that does that, is giving us the idea that, gee, that short-term momentum, that one that's plugging along on the 5-day moving average, is strong enough that it's cutting above a little bit longer-term moving average, a 20. Now, a 20 isn't a super long moving average either, but it is longer than the 5. And so when we identify that point, we can say that is our crossover, that is our entry signal. We're not worrying about finding support and resistance levels. We're not worried about, do I have enough volume? We're not worrying about, am I in a flag pattern or see a flag pattern or a triangle? None of that. All of that goes away because all we're focusing on is the 5 and the 20. So when the stock crosses the 5, that's the entry signal. Okay, without looking at any of those other things that you're used to and that we've talked a lot about in technical analysis, just the crossover. And you stay in the trade until it crosses down below. So we would need to see this 5 moving average cross down below the 20 to give us an exit signal here. Okay, well, let's go find some opportunities that maybe we can identify where the cross is occurring today or recently and use those. Now, I want you to notice something here, just on the chart that we're looking at. Notice before the crossover here that this was maybe showing a little bit of weakness, right? It had been here about 95 and it pulled back here to 75. And so it was really shortly after that point that it crossed over and kind of took off on this big bullish trend that it has. Now, not all stocks are going to do that, right? Some will. We're hoping to find the ones that will. Sometimes they might crisscross a lot. We might get whipsawed out. And so just keep in mind that it's not guaranteed to continue to go, even though we might get the signal on it. All right, let's take a look at things. Let's look at maybe how we might try to find stocks that are doing this. Now, we could, if we wanted, we could come up here to our watch list and we could come out to, say, a public watch list. Say we came out here to the NASDAQ 100, and we could start here at the top and just go down and just see if we have a crossover. You know, so here I am, I'm going down. We're not seeing a real recent crossover. In fact, all of these are old signals. I pulled up the NASDAQ 100, and it could be one of your watch lists, right? Maybe you have a watch list of these are my favorites because I trade them all the time and I'm comfortable with them and I like their trends and so forth. Okay, so that could take a little bit of time. So we're going to look at doing a scan here. And the scan, we're going to put in some parameters and then we're going to have it go look for these crossovers. All right, over to the scan tab we go. And I have the scan up here that we're going to use. And I'm going to show you how to get part of it. All right. Well, I'll show you how to get all of it. Okay. First criteria here is I've put in the last, which is the last price of the stock. If you like to use the close or the open or some other variable of price, go ahead and do that. And I've set that at a minimum of 10, and it comes from our stock filter. And when we start over and we just do a fresh new, ready for set up a new screen, it'll always start us out with 3 stock parameters. Well, we're only going to use one. We're only going to use that last price. We're going to use 2 study filters. Where do those study filters come from? Over here on the right, click plus add filter. There's our stock filter that the last price comes from. And then we have some additional ones. Both of the ones that we're going to use here today, we're going to grab out of study. Okay, so you can see we've got study and study. Let's skip the middle one for a moment. Let's talk about average volume. You know, we could run this scan and say do a 520 crossover on any old stock that's at least $10, but that might not be that useful to us because maybe we want to make sure the stock has enough volume for the type of trading we want to do. So if somebody was saying, you know, I'm trading stocks, I'm good with that, you know, they might say, I'm looking for average volume of that stock, and I have kind of a shorter time period here. We're doing 20 periods. The default that comes in here is 50. And then it says we're looking for that simple moving average of volume to be greater than a number. The default that comes in here is 1 million. Now, if you're an option trader, you might want to keep it at 1 million. If you're a stock trader, you might say, well, my threshold's a little bit lower. We could do, you know, 500,000, 250,000, whatever number you're comfortable with. Okay. For the purposes of this particular scan, we're going to use 500,000. All right. So we're looking for some stocks with liquidity. And then to save us some time, we're going to look here for this moving average crossover. Okay, so I'm going to add a new study and show you how to find it. If you're following along with me and want to try it yourself. Now, I do need to remind you that the study filter does not work in paper money. And so to run this study, or this scan, you'd have to run it over on your live side, and then you could share the results with yourself, bring it over here to your paper side to work with. Okay, so I always want to remind you of that being the case. So we added a study filter. It always starts out here alphabetically, so it's up at the top, the ADX crossover. And we're going to bring this down, and we're going to just select crossovers. And then we're going to determine the type of crossover we want, which is just right here, moving average crossover. We're going to look for the 5 moving average to cross above the 20 moving average. So it'll put some numbers in here. And so simply here, I said, nope, not 15. We're going to go with 5 in a simple moving average, crosses above. Okay, notice I've got this middle one here. So we're going to say crosses above. What period? We're going to go 20, right? That's where we put in our periods. And then we're going to base it on the closing price. Okay, so you fill this in, it does the work for us. How cool is that? Yeah, we like that. All right, now if we were going back to say the NASDAQ 100, we could say intersect with here. We could say intersect with, and then we'd come down here to our public watch list and would grab NASDAQ 100. Okay, now if I hit scan, we don't get a whole lot. We get 3. We get 3 stocks that come up here, which is good and helpful, but it really narrowed down how many stocks we might want to actually look at. But if you were saying, hey, I like to use the NASDAQ as my watch list, yeah, then that might be a quick, easy way to go through that watch list and find where some crossovers are. Okay, let's look at one of these. Let's look at CDW. All right. Now on CDW, as we look out here, and let's go to a 1-year chart. So we see a little bit more history, what's been going on here. Well, for the most of the year, it's been in an uptrend. Looks like started to show some weakness, and then on their last earnings, must have disappointed in whatever they said, right? The market's always right. In terms of everything's priced in there. Boy, did it get priced in quickly with a big old gap drop down. And now it's kind of trying to fight its way back up. Now, you might look at this and go, man, I don't know if that's bullish enough for me. And you certainly could use your discretion. You might look at something and go, that doesn't look like it's trending at all. And you might discount it. But for our purposes, anytime you see that cross on a stock that meets your criteria, then we're going to take it as an entry without checking other things. support and resistance, how much volume there is, if it's in a price pattern, none of that we're even going to think about. Okay, let's look at another one here. INTU came up here. So let's look at INTU and bring that up. Let's look at this one. Been in an uptrend for most of the year. However, year to date, it's down. It's down about 3%. Okay, on this year to date change. And so this big move when they announced their earnings and the market didn't like it, really punished them, didn't they? And it quickly went to a crossover down, even though it's kind of had been in an uptrend most of the year. So if somebody were going to do it bearishly, okay, they might have taken an entry when this crossed to the downside, which looks like it was right here on this candle, the second day after the big drop at earnings. But now, look what's going on right now. It's kind of bottomed out. The short-term 5-period moving average has been going up for 5 days now. Okay, and so it today is crossing through there and giving us an entry signal. Now, I'm going to tell you, it does take a little bit of guts to say, oh, I'm going to trust it, right? Because it had such a big drop there. However, big runs, they need to start somewhere. Now, this is not guaranteed to be a big run. It's not guaranteed to continue, but we're going to trade it based on just the crossover signal. And, you know, it is kind of an expensive stock. We're actually going to do this as a trade. So we're going to come over to the trade tab. And we are going to say buy custom with a stop. And we're going to buy here, we're going to buy 16 shares. I did some position sizing before our class started. And you might wonder, well, you know, what should I use? How should I position size this? Let's get this number right. We need it 16 here, or yeah, 16 shares. You could do a couple of things. One thing you could do is you could say, well, okay, if it crosses down below, what might that value be, right? Because we don't know, it hasn't done it. We don't know if it's going to do it. But because we're getting the cross right here, it might, you know, if it just pulled back down, we might get a whipsaw in a day or two. It might cross back over again. You know, maybe you're going to estimate maybe it's at about 590, or if you want to give it more space, you know, maybe you're down here 585 or 587 or whatever you feel like gives it some room. And then do your typical position sizing, okay? For example, I didn't do it on this, but for example, what if we said, okay, arbitrarily, we don't know that this is going to be the actual value if it were to cross back, but say we use that 587, okay? I'm going to write that number in here, and this is our theoretical potential exit. So we don't know what the number is, okay? And then we'd take the price of the stock, and so let's use our little calculator here for a minute. Let's go with 605.89 minus our value here. Let's collapse this, 587. And it gives us 1889 of risk. All right. Then we'd say, okay, how much can I risk? I can risk $750. And we're going to divide that by 1889 so that we can at least just get kind of some position sizing. Now, I went a little bit lighter on this one. I did not actually use that as my intended exit point, that 1889, but I want to give you some idea of what you might consider trying to do here. Now, let me come over. Let's look at questions that you guys might have. John says, why keep it at 1 million? I think that's when we were talking about the volume. Yeah, you could keep it at 1 million if you wanted to, if you're an options trader and you use that as a filter to help you identify liquidity in stocks. That can be one way to help you get there, although never guaranteed. Why is the moving average crossover being used twice? The only reason it was being used twice is because I was showing you the scan, and in reality, what I need to do is come over here and get rid of the last one that I used to show you how to do it. Okay, I apologize, that is confusing. Let me get rid of it, and I'll show you our results are going to still be the same. when I click on it. So we didn't need to do it. I just wanted to walk you through the process. How do we pick out those numbers? Okay, I think we're okay. John, the way that I came up with 16 on the position sizing when I did that is I looked at knowing that we didn't want to put more than, say, $10,000 into any trade in this account. And so I took 10,000, divided it by the current price of the stock, and that's where I came up with the 16. Now, this other methodology, we actually could buy more shares, right? We could buy 39. Again, guessing, because we have no idea when we might get a 5 crossing down below the 20, but that would be our exit. Let's go ahead. Let's put Intuit in here. And so we're doing the 16 shares. Price of stock is whatever it is, right? And we'll just leave this open here for a minute. Now, the question is going to come up and you're going to say, well, can we put in an exit to get out when the 5 crosses down below the 20? Can we do that? The answer is yes, we can do that. We're going to set it up here. It is going to act as our stop loss, but we're just going to put it as a market order. We're going to make it good till canceled. And then we're going to put in our conditions, and it's going to be found in the conditions. So as we bring this up, we're going to say, all right, if Intuit does what, we're going to go down here and we're going to say study, and then we're going to say edit study. Okay. This you might want to take some good notes on, all right, because it is a little bit detailed, all the little clicking you need to do. All right. So then we're going to say, all right, we're going to go to an edit. And we don't want just the simple moving well, we do want the simple moving average. However, we want it to be the 5-day. Change that from a 9 to a 5-day. Crosses below. We're going to say on that middle one, select a condition. Again, we're going to say a study, and we want a simple moving average. So I'm just going to start typing it in. So simple moving average here. And then the period, we're going to change that to 20. I'm going to scroll down here just a little bit lower. And that is, I want you to be able to see this within 1 bars. 1 bar means 1 trading day, right? If I wanted it in the last 10 trading days, I could put a 10 in there. Now, that kind of, if we were to put a 10 in there, it might not be all that helpful because we're trying to identify the cross really quickly. But you could you could change it to a day or 2. This is on the exit signal here. And so, yeah, we definitely want on the day that it crosses, unless you modify your rules and you want to give it a little buffer in there, then you could consider, putting a 2 or 3, whatever it is that makes sense to you, that you want to give it time to cross below and maybe stay there. Okay. So we're going to go ahead just with the 1 day. We're going to hit save. And we're going to hit OK, and that's what our exit's going to be based on. The 5 crossing down below the 20. Now, there could be some questions here, so I want to make sure we catch it. Iris says, can you put in the scan filter? Again, I missed them. Yeah, we'll do it after we finish our trade here. Yeah, we can do that. All right. Hopefully you took some good notes. We'll repeat that process again here. And we're just going to let it go in whatever the market price is right now. That's actually kind of a little bit of a wide bid-ask spread. Maybe because it's paper money, it'll be nice to it. I'll put it close to maybe just above the midpoint level. All right, I'm going to send it off. This red here is just letting us know, hey, study-based exits carry some additional risk. There's no guarantee of actual price, which we know. We don't know what the price is going to be, and we're aware of that. So it's just letting us know. All right. Now, if you didn't feel comfortable putting in the exit signal the way that we did, and you just wanted it to set and you thought, if I set an alert, maybe it'll let me know about it, so maybe you come down here to the let's say 592 or whatever. You say create alert. Let us know if this gets at or below our 592. Now, it's not guaranteed we'll have a cross there, but we could kind of estimate where we might think a cross could occur. All right. Harry says, you exiting on the next day or on the current day? We're putting it on the current day. Yeah, if you did want to say you wanted to do it for a period of 2 trading bars, so that you absolutely had a close and the next day below it, that's how you could assure that. And these are some of the things you would paper trade and figure out if you liked something like this. Yeah, you do it in your paper money account and just kind of work on fine-tuning the rules you want to use, right? You don't have to use what I'm showing you here, but I also think that's how you get familiar and comfortable with the crossover system. Now, we would look at this every day. All right, we know we've got our stop in there, but we want to be aware if our purple line is taking a nosedive, if our 5 is taking a nosedive towards that 20, we want to be aware of that. All right, let's look at another one here. Let's look at, there's a couple we could choose from. One that came back on our list, and I should have told you this, in our watch list, I saved the results that I got back earlier today. It's not the NASDAQ 100. I called it 520 CL crossover. So the results of the watch list that we ran, they're all sitting in here. This is what it looked like about an hour ago. And sometimes there can be a little bit change on a day-to-day. Maybe there was a cross and all of a sudden there isn't, right? Because maybe it only crossed by 5 cents or something. Okay. But another one on this list, there's deer that kind of looks like this, and you're like, well, it's been down, it's been sideways. Do I maybe really trust it as a down? But we have the crossover. This, I would say, would be aggressive. All right. I'm going to show you another one that maybe doesn't appear quite as aggressive, okay, that came on our list, and that's a 10 cent. Now, this is a foreign stock. This is a Chinese stock. We see that ADR. And if we go into the Analyze tab and we read about it, we see that it's headquartered in Shenzhen. I'm not very good at my Chinese pronunciation, but I think it's something like that. I tried not to make it sound Spanish. Okay, so Shenzhen. So you're like, okay, we have additional risk of maybe wanting to be comfortable trading stocks that have come from China. And some people might not be. Okay, you might go, nope, that is not on the criteria for the list of stocks that I like to use. The reason I said that this might be a little bit easier is because this crossover is taking place after a little bit of a pullback, but not like 2 months of pulling back or 3 months of pulling back. Okay, I mean, it just had this peak here on May 14th. We just barely got past June 14th. Okay, so pulled back a little bit, and it looks like it's trying to recover here. All right. Now, we don't do option trades in this class. This stock does not have any options. Okay, we would just solely do a stock trade here. So let's pull it up. We're going to do, let's see here, bid-ask spread's only 3 cents. That's nice. We're going to do a buy custom with stop again. And let's decide how many shares might be appropriate here. Now, we could do the same thing where we say, all right, we don't know if it's going to cross. We don't know where it would cross if it did cross back. But again, maybe if it happened fairly soon, maybe that value would be let's just go with, say, 46. Okay, I'm going to put 46 down here as our possibility so that we can position size. Okay, we'll go to our calculator and let's clear this up, and we'll take 48.66 minus 46. That's going to tell us our risk on the trade is 266. Okay, so I'm going to put risk is 266. If you felt like that was too much, you can change it. If you feel like it's too little, you can change it. But we're willing to risk 750, which is 0.5% of our $150,000 portfolio. We're willing to risk that much. So we'll take 750 divided by 2.66. Says, hey, we could buy 281 shares. Now, if we really bought 281 shares here, let's see how much we'd be using of our account, 48.64. Because another rule that we might use in our classes, we might not want more than 10% of our account in any single trade, right? We'd say, oh, that's the max. That means we'd need to spend lower than 15,000. This is 13,000. It's lower than the 15,000. So we'll go ahead. We can do 281 shares. Okay. We're going to do the same thing where we put in our, let's go ahead and we're going to put in our alert first. We'll put it in at 68. Not 68, 46. All right, so we'll put that in about 46. That's our just kind of our mental be aware of area. It gets below that, so we'll get that alert going. Then we'll go to the trade tab. We've already got our order set up here, so we're going to change it to 281. And we're going to match that up on the buy order and the sell order. Again, here, our stop is going to be essentially the 520. So we're gonna put that in. We're gonna make this a market order, good till canceled, and we're gonna put in the condition. Okay. If you missed this the first time through, or you just came in and didn't see it, this is how we automate it to say crossover. All right, when the 5 crosses down below the 20. So again, we'll use the ticker symbol on the method. We're gonna come to study, and then we're gonna edit the study. And here, we're, let's see. Study simple moving average. I went down a little too low there, okay? So we want this simple moving average. Where did it go? All right, so we want our simple moving average. This is looking a little bit different than the first one. I'm trying to figure out what I clicked on different on this. So actually, I'm going to hit cancel, and let me look at this for just a moment. Because I believe the first time I went down and I did our study, and it's a crossover that we're really looking for. But the studies aren't coming up here like I expected them. Oh, that's because I have to hit edit. Okay, that's what I was missing. Got to hit the edit button, okay? And then here we'll do our simple moving average, our period 5, right? Crosses below, again, our second period moving average. Yes, I am. I'll start typing it in. Yes, I am. There's our simple moving average. And down here, length 20. We want to see the 5 cross below the 20. Now, going back to a question that somebody had here, and that was Harry. Harry said, are you exiting on the next day or the current day? When we have our bar set to 1, it's going to be the current day, but let's do maybe what Harry's thinking. Let's give it that it has to close below it, the current day as well as the next day, and then it would do it. Okay, so we're going to do that one a little bit different, adding that variable. We're going to hit save, going to hit OK. We're going to send this off. Save. So we've got good till cancel. We've got it moving the 5 below the 20. We're going to hit confirm and send, and off it goes. We should get filled, which we did. Very good. Any other questions about this methodology? What you would do to track it? Each day, I would still pull the stock up. I would just still see where, see that hopefully it's not crossing. This is just a barely cross here, right? Some of you here weren't so convinced of that. You might add discretion, but the purpose of this was not to have any discretion. If you can follow the entry rule of 520 cross, you're in, 520 cross down below, you're out. You follow those 2 rules, you're not paying attention to anything else. Okay, that's what we call a non-discretionary system. Let's see here. Chris says, system gives up a lot on pullbacks to lag the SMA. Have you tested this system with holes or EMAs? Chris, you could do that. You absolutely could change the variables up here. Yeah, you could use whole moving averages if you want. Not a problem. Whole moving average is a different type of moving average. It is smoothed. and it helps it not lag as much. We always know moving average lag a bit, but in this case, we're using short-term moving averages. A 5 is not going to lag a whole lot. That's going to be pretty tight. All right, I want to go back and review a couple of trades that we've done in our class the last couple of weeks, okay? The first one I wanted to go through with you is NVIDIA. All right, so let's actually bring it up on the chart. And on NVIDIA, we didn't use a 520 crossover. What we did do here, though, was we were using our DMI indicator. Okay, so let's go pull up DMI, and I'm going to clear out these moving averages. So we'll load a style, and our style here. Let's do DMI ADX. All right. And if you weren't here, again, I'll have a link to this particular session. This was I think maybe 3 weeks ago when we talked about DMI. And DMI is a trending indicator. And the green line represents a bullish trend. The red line, which is DI minus, represents a bearish trend. Whichever trend is on top is the dominant trend. Then this black line, this is what we call our ADX line, gives us an idea of the strength of the trend. Sometimes people even use the ADX line independent of using DMI. But what it shows is anything above 25 means it's trending pretty strong. Now I'm going to zoom in when we got in. So I guess this was actually just on the 11th, so last week. Seems like it was longer ago than that, but you never know. Okay, at that time, we were seeing the ADX rising. The green is clearly above the red, so we know the bullish is in charge. And this ADX on that day was at 30. 25 or higher is strong. Okay, so we went ahead and we got into this trade based on this indicator. Now we're still in it. Green line has not crossed over red line. That's kind of similar with the moving average crossovers, but in this case, yeah, we're looking for the green to cross below the red, and if it does, that is our exit signal. So right now, we're still in the trade. Okay, so I just wanted to give you an update on that real quickly. First Solar, we're out of First Solar, and I do want to spend a moment on this. This one, we used RSI, and we had noted here a flag pattern. We got in on the flag pattern and noting that our RSI value was high, and let's just bring it on here real quick. I don't know if I have a study for it or not, but let's just go ahead, bring it on. And here, it was above. It was in that over bought area, meaning buyers are in control. Okay, it was at 78, and that threshold is at 70. So we got in, and the rules of this, you would essentially trade it like you would a flag pattern. So we entered into the trade here. It went up another day. What should have happened at the end of this day? We should have adjusted our stop loss. Yeah, we should have said either the low of this day, or if you were, say, adjusting it and this day maybe hadn't finished trading, maybe you'd have your stop loss, maybe the low of this day. In the case of the day where we put it in, we just put it to be back in. If it got back down to this area, kind of the lower edge of that flag pattern, that would be our exit point. But in reality, we should have been more proactive. We should have adjusted it. If we had adjusted it, okay, even say to the low of this day, well, we would have got out on this candle here after 2 days of a pullback. We'd seen that weakness. If we had adjusted it here and put it below this low, which some people might, right? You could do that. Some people like to move that stop loss every day that they can. Then we would have exited right here on this candle. Okay. As it was not monitored closely. And so it didn't get us, it took us out today when it came back to its original stop loss. So the lesson I want you to learn there is be very proactive with your stop losses. We could have, had we done that and followed the rules, we could have exited possibly at a positive as opposed to a negative, that being stopped out today. All right, those are the only trades we're going to follow up with today. Hopefully, those of you that have been participating in these discussions, that kind of gives you some idea about it. So we talked about trends. Today we focused on short-term trends. We talked about a crossover system, right? 5 crossing over 20 was our entry. 5 crossing down below 20 is our exit. And those are the only rules. Non-discretionary. Okay, if you can follow those 2 rules, you should, if it seems intriguing to you, I should say, paper trade it. Okay, and see if you like the way that develops. All right. Well, Lee, I appreciate you helping me out here today. Harry wants to know, can we do these stops in our paper trading account? Absolutely. Yeah, you should be able to. All right. Now, coming up next, right at the top of the hour, we're going to have a little break here. We're going to have Exploring Thinkorswim. Brent Morris heads up that discussion. He does a fabulous job with it. Those of you that are trying to get better acquainted with Thinkorswim, you won't want to miss that session. All right. Have a great afternoon, everyone, and we'll see you at the top of the hour with our next class. Bye-bye.